and welcome. We have with us a very special guest joining us today on the show. Jonathan Barratt, CIO of Crude Securities, joins in to talk to us about the biggest news point this morning, which is the big swings in crude prices. Morning, Jonathan. Thanks a ton for joining in. Jonathan, crude's been in the news the last 48 hours to be precise. Last week as well, we did see a big sort of swing on crude prices. In overnight trade, crude was down almost 5%. We've seen some recovery in Asia this morning. How are you feeling about crude? We'll talk about the reasons in a minute, but I believe OPEC Plus members are not able to agree, a stronger dollar, or rather a weaker dollar, which could be a positive. And of course, more importantly, more than expected rise in US inventories. But we'll talk about that one at a time.
Yeah, no problems. Look, I'll tell you what, there's a lot of volatility in there. And I think when you look at that volatility, it sort of also gives you a picture that the bulls and bears are quite not matched up. And that sort of also indicates that there's perhaps a little bit of a base forming. So 3 to 4% swings, it sort of suggests that we are trying to find a base, and we'll probably get some pretty good moves pretty soon, and a good trend pretty soon.
Jonathan, while those swings are wild, and you rightly said that we're trying to find a base, I know Saudi isn't going to be too happy with prices sub $80 a barrel. What are you sensing? Where is your bias? Do you think we could see crude headed and sustained below $80 a barrel in the near to medium term?
Look, I'll tell you what, that's a really interesting question. And I think when you look at it, when you look at OPEC Plus as well and their supply cuts, and well, obviously Saudi Arabia, it's all really a US play, and US is the largest producer at the moment, supplying about 14.7% of global supply. The interesting thing here is the US is actually, or this year, tipped to increase their supply by about another 700,000 barrels. And I think when you look at OPEC Plus and Saudi Arabia, they're saying, well, what sort of defence can we actually have, in terms of trying to keep that price high? And I think in my mind, it's sort of, anything down sub 80, it's a bit of a concern. We've always said that OPEC get very concerned at about US $75 a barrel. Perhaps they've sort of pushed that up a little bit because we're starting to get a lot of persuasion from OPEC to say, look, this is not right. We've got to see prices stabilise to the top side. But I think while the US is producing what they're producing and increasing, it's going to be a greater challenge.
Talking about increase in production from the US, what was also came in as a surprise was US inventories have actually risen more than expected. This is despite the fact that winter season has set in. What is that trajectory looking like? Do you expect that inventories may continue to rise, and that could have a double whammy impact on crude, I'd imagine?
Oh, look, absolutely. Normally at this build time, and when we do come into winter, Northern Hemisphere winter, we do see that pickup as well. There's also a brief time when the refineries turn around to producing heating oil as well. And that sort of says that there is this inventory build for that. Look, it's all going to be a part to see what the weather does. More colder temperatures is sort of going to see that demand. But when I see that inventory build in the States, it sort of doesn't come as a surprise to me because I see we do get that build prior to the winter months. So I think it's more temporary, but I think it's just people gearing up to, or the market gearing up to say, look, it's going to get colder. If it gets colder, then we increase that demand down the track. So I think it's just more of a natural play there, given this time of the year.
Right. I think the other big talking point, Jonathan, like you indicated at the start of this conversation, was a potential truce between Israel and Hamas. We are eyeing a ceasefire, which could potentially happen starting Friday. These were the big sort of triggers for crude in the last few months. Of course, Russia, Ukraine early this year, followed by Israel, Hamas. Would that also have some sort of a bearing on crude prices? Would the bears be back in business if this actually plays out as expected?
Look, I think it already has and is starting to, because there's common sense coming to it. I think the first sign is that they're talking and they've come up with an agreement for a hostage swap. And when you look at it, it's 150 Palestinian prisoners for 50 hostages. And what this means is that they're talking. They're actually talking, and that conversation sort of could carry on to more talks about, a ceasefire, more talks about sort of coming back to being more rational about what's happening there. And I think, to me, they're saying, well, no one's going to really win. But if we're doing the hostages, then that tells me that the probability of more a regional conflict rather than just restricted to where it is sort of starts to dissipate. And with that, we have to write off some of the premium in the oil, some of that risk premium in the oil price. And I think what you have seen is that movement from about $90, $92 a barrel down to where we're up at about $80 a barrel, and maybe a little bit further if this hostage swap starts to pick up more momentum.
Right. Also, one factor that's playing in favor of the crude bulls has been a weaker US dollar. That usually works, is rather inversely related to the way crude prices move. Keeping that in mind too, I'm going to ask you upfront, with current prices of crude, where exactly would you place your bets in the near term? Would you be a buyer of crude? Would you be a seller? If you're not buying or selling at these levels, what are the sort of levels we're watching out for?
I think when you look at the US dollar play, we've actually seen that really well with the gold price, and gold has really moved higher, which has been fantastic for those gold bulls. Whether or not it'll stay is another thing. But I think you've got to give the chance that we do have a major low here with that volatility. So I get a sense that if the economy start to pick up, if economic demand starts to come, then I think you will find supply will meet demand. We have been looking for a deficit this year in terms of supply, so I think that could support it. I think if we do get a breakthrough that 82.70, then I think I'd be happy to go long.
So you would go long if we break 80 to 70, and on the downside, any other levels you're watching out for?
I think let's see what OPEC says. Obviously, they're cancelled and they're coming back next week. Yeah. I think there will be a knee-jerk reaction if they extend their cuts, and I think that might support it. So I think US 80 is pretty important for me. So an 80, 82.50 range, and I think I'm pretty happy to trade the break on both sides.
So any break sub 80 sustainable is when you'd consider going short on crude. Is that a fair assumption? Yeah. And also on the
absolutely, and that's why you've got that volatility here, because it's actually, the longer it stays here, the more we get acute to say, well, look, we're going to get a break, and therefore we're going to get a bit of a trend, which is what we talked about at the beginning.
Very lastly, Jonathan, if we do break 80 and stay below 80, do you think we could head back to levels of sub 70 anytime soon?
Oh, I think it's a possibility, but let's have a look what the economies do, because we've seen that volatility in oil extend to a lot lower than here, just based on the general economics. So, yeah, I'll be trading with the break.
Yeah, so for now, we're playing a range-bound trade on crude. That's the view coming in from an expert on the asset class. Thank you, Jonathan, for chatting with us this morning. Have a great day. See you soon.
Thanks very much. Thank you very much.